The so-called Big Beautiful Bill signed into law last July came with a farm policy to help farmers and rural communities. But a University of Illinois ag policy expert warns that major political shifts we're seeing in Washington may leave many navigating years of uncertainty. Agriculture specialist Julia Thomas has more.
Jonathan Coppess says a key partnership that has long held the Farm Bill together, linking farm programs and food assistance, may be unraveling. He says last year's reconciliation legislation reauthorized major farm support programs, things like agriculture risk coverage and price loss coverage, all the way through 2031. Conservation programs were renewed too, but the Supplemental Nutrition Assistance Program, or SNAP, took cuts. Coppess says many other rural programs were left behind, and he worries the bill disrupted that alliance and could change how farm policy is built moving forward.
Everything else around it, rural development, research authorizations, a lot of those things did not get reauthorized. And including in conservation, the Conservation Reserve Program is also kind of in a limbo state and at risk. And so there's a lot of questions around what happens with them. Farm programs have till 2031. The CRP has until September.
Without SNAP in the equation, Coppess says the political math becomes much harder. The nutrition program doesn't just help families in need, it helps farmers too. Beyond politics, Coppess warns the current system of emergency or ad hoc farm payments is a sign that the structure itself may be failing.
We're seeing a lot of indications that farm policy is broken. Ad hoc bridge payments and things like that, right, are indicators that things are not working. So the longer term, bigger, and frankly more difficult question is, so then what would be a better policy, or how do we fix these or change these policies?
He says these short-term fixes can distort markets, hurting farmers in the long run.
The payments themselves are causing some of the problems, like keeping costs up or preventing adjustments that need to happen in your fertilizer, in your cash rents, those sort of things. So it isn't that payments themselves are just a net good even for the farmer, because they really could be causing harm. One of the concerns I have is that throwing a lot of these ad hoc payments in particular is having that impact, and it's hurting farmers and is going to hurt them over the long run, because we're not fixing the problem. We're not fixing the market issue. We're just throwing payments in there.
He points to the U.S.-China trade fallout as an example. While American soybean exports struggle, Brazil is rapidly taking over the global market. Another major concern is the outdated base acre rules that determine payments. Coppess says the system now creates huge disparities between farmers and hits young producers especially hard.
It is base acres plus these huge payments for some crops and not others. And so this imbalance plays out over the base acre, because now you can plant different crops and you've got a whole different income situation as between the two farmers of the same crop but very different payments, and that's part of the problem. And it really hits the younger farmers too, because they may not have the base acres, they may not have some of the capital support that a more established farmer would.
For now, farmers will still make year-to-year decisions on crops and insurance, but Coppess says the bigger question, how to build a fair and functional policy for the next generation, is far from settled. He says the breakdown of the traditional Farm Bill coalition may force Congress to rethink how policy is built altogether. But with major programs locked in through 2031, the biggest challenges may still be years away. Reporting for Tri-State Trusted News, I'm Julia Thomas.